Hey everyone, welcome. Today, we're going to tackle the world of investing. I know, it can sound super intimidating, but we're going to make it simple, straightforward, and actually a lot of fun. And how are we going to do that? By explaining the whole thing with bananas. So, you've got this idea, right? You want to make your money work for you, see it grow into something more. But there's always that one huge question that just stops people in their tracks. How do you even start? It feels overwhelming. But trust me, it really doesn't have to be. So to cut through all that complicated jargon, we're going to use one super simple analogy to guide us through this whole thing. Yep, we're talking about bananas. Okay, let's dive right in. First things first, what does investing even mean? Let's get right to the core of it using our trusty banana analogy. Think about it like this. A monkey wants more than just one banana for today. So instead of just eating the one it has, it plants the seed from it. That little seed, that is your investment. You're putting a little bit of money away into something you believe is going to grow into something much, much bigger over time. Like a whole banana tree that can give you bananas for life. And this is where the real magic happens. You plant that seed, and for a while, it honestly feels like nothing's going on. But that's the power of time and compounding. Over a really long period, that one tiny action can grow into an absolutely massive result. This is not about getting rich quick. It's about letting time do all the heavy lifting for you. So this brings us to a really crucial difference we need to talk about. The difference between just saving your money and actually investing it. You can think of it as the difference between having a sad, lonely pile of leaves versus a big, thriving banana tree. So here's the deal. When your money, your leaves, is just sitting in a bank account, it's not growing. In fact, it's actually losing value over time because of this thing called inflation. That's just the fancy word for how the cost of everything, like, say, bananas, goes up. It means your dollar buys less tomorrow than it does today. But investing gives your money the chance to grow faster than inflation, so its value actually goes up. And this chart shows it perfectly. Let's imagine inflation is at 3% for the year. The money in your savings account, it earned basically nothing. So you've effectively lost 3% of your money's buying power. But if your investments grew by, say, 6%, well, you didn't just beat inflation, you actually got wealthier. All right. So you're on board. You want to grow a banana tree. But how do you actually go about doing it? Well, there are two main strategies you're going to hear about: active investing and passive investing. Let's break them down. Active investing is, well, it's the really hands-on approach. You're the one doing all the deep research, analyzing companies, and trying to perfectly time the market to buy low and sell high. Passive investing is more of a set it and forget it kind of deal. You just invest a certain amount of money on a regular schedule into a big fund, no matter what the market is doing that day. This is a strategy called dollar cost averaging. You'll always hear active investors talking about buying the dip. And yeah, it sounds simple, but the reality is it is incredibly hard to know if the dip you're buying is the actual bottom, or if the market is just on its way to a much, much deeper dip. Okay, now for some fun. There are a ton of different things you can invest in. So, to make sense of it all, we've created our very own 100% official, totally serious investment tier list. Kicking things off, we've got gold. It's a classic, right? A good way to protect your money from inflation. The downside is it doesn't really do anything. It just sits there. But the major upside, you get to feel like a pirate. And for that alone, it gets a solid B tier from us. Next up, real estate. Now, it can be an amazing source of passive income from rent, for sure. But the amount of cash you need just to get in the game is huge. For the average person just starting out, it's pretty tough and risky, so for now, we're putting it in D tier. So what about crypto? I mean, it is famously volatile, which means prices can swing like crazy. That's a lot of risk. But you also can't deny that something like Bitcoin has shown incredibly strong performance over the long run. It's a real mixed bag. So we're going to slot it right into C tier. All right, here comes a bit of a hot take. Picking individual stocks, honestly, for most people, the amount of work you have to do to get it right, it's just not worth the reward. I mean, unless you're some kind of financial genius, a real Warren baboon, it's an incredibly difficult game to win. E-tier it is. Which brings us to index funds and ETFs. We'll get into what these are in just a second, but for a beginner, they are a fantastic option. They give you instant diversification, which means lower risk, and they have a proven history of steady growth. This is an easy A-tier placement. And of course, the #1 undisputed champion of every investment ever, the absolute pinnacle of value, bananas. It's obviously S-tier. They're rare. They're valuable, and they're delicious. Okay. All jokes aside, since we ranked index funds so high, let's actually talk about what they are. So instead of trying to find that one magic needle in a haystack, that one single company that's going to be a huge success, an index fund just lets you buy the entire haystack. You're investing in a tiny piece of hundreds of companies all at once. And this right here is the key to why they're generally safer. Your investment is spread out. If one of those companies totally fails, it's just one tiny slice of your pie. Your overall investment doesn't take a massive hit. This whole idea is called diversification, and it is your absolute best friend as an investor. So let's bring this all together. You get the ideas, you understand the different options. Now for the most important part, how you can start smart on your own journey. And we have to say this loud and clear. This is not financial advice. But here's a really simple way to think about getting started. First, just look at your budget and figure out an amount you can comfortably set aside on a regular basis. Second, modern investing apps make the technical stuff incredibly easy. And third, start small. Just schedule those regular investments and let the system do its thing. And finally, please try to avoid these really common mistakes. Never, ever invest money you might need for bills or emergencies. Remember, this is a long-term plan, not a lottery ticket. Stay consistent with it. And please, don't panic and sell everything just because the market has a bad day. That's usually the worst time to sell. And look, if something promises you guaranteed huge returns really fast, it's almost certainly a scam. So there you have it. We've peeled back the layers on investing, from planting that first seed to understanding all your options. The biggest takeaway here is that getting started is way simpler than you think, and it can be incredibly powerful over the long run. So that just leaves one final thought. Your banana tree isn't going to plant itself. What's your first step going to be?